Welcome to Money Talks, your intel on the Philippine markets and the economy. Sitting in for Cathy Yang, I'm Danny Laurel. Now, in the headlines, Congress is set to ratify the proposed 2026 national budget. That's today, after lawmakers sign the bicameral committee report on the 6.793 trillion peso spending bill for next year. Now, online gambling operators will have to pay a monthly minimum guaranteed fee, or MGF, starting April. And government infrastructure spending fell for the fourth straight month in October. Congress will hold session today to ratify the proposed 6.79 trillion peso budget for 2026 after the bicameral conference committee signed the 4,000-page report. BICAM members met yesterday to affix their signatures on the reconciled version of the General Appropriations Bill. That's marking the first time that the enrolled copy was printed and shown to lawmakers before ratification. Now, all budget documents will be uploaded on Congress's website after ratification. This year's BICAM was the first ever to be live streamed, though budget watchdogs had warned that soft pork items remain in the spending bill. Senate Finance Committee Chair Sherwin Gatchalian says the budget is equipped with special provisions to prevent politicians from partaking in aid distribution. He adds that the list of infrastructure projects is now more detailed in the budget.
So, imposible na magkaka-ghost project or substandard project kasi ngayon meron ng coordinates. Unlike in the past, walang coordinate sila. So, pwede siyang mahaba, pwede maiksi, pwedeng ghost. Yung mga big-ticket infrastructure projects like classrooms, hospitals, mga health centers, farm-to-market roads, kanya-kanyang ahensya na ang gagawa.
But a provision to remove the guarantee letter system under the Medical Assistance to Indigent and Financially Incapacitated Patients Program, or the MAIFIP, was not included in the GAB. MAIFIP has been described by critics as a health pork barrel for being vulnerable to political patronage. Senator Panfilo Lacson urges the public, led by the church and civil society organizations, to maintain the same vigilance in monitoring the budget's implementation. Now, government infrastructure spending fell for a fourth straight month in October. That is as disbursements for the Department of Public Works and Highways continued to slide amid the flood control scandal. Data from the Budget Department showed spending on infrastructure and capital outlays plunged more than 40% to nearly 66 billion pesos. That is down from 110 billion pesos a year ago. Month-on-month disbursements also dropped 16% from September. The DBM said the decline was driven by a sharp pullback in DPWH spending following the flood control corruption scandal. It cited project validation issues, payment delays, weather disruptions, and problems with contractor tax clearances and license renewals. Looking ahead, the agency warned infrastructure spending is likely to remain under pressure through the rest of the fourth quarter. The peso will likely move sideways in this shortened trading week. With market activities sluggish due to the extended trading break, the local unit may trade between 58.50 and 59 against the greenback. On Friday, strong inflows of foreign remittances helped lift the peso. It closed at 58.71 to the dollar, gaining by 14 centavos. The peso opens this Monday a tad stronger, that's at 58.68 to the greenback. It is the last trading day and the last working day for the Philippine economy in 2025, and here to take stock of the year that was and hopefully what we can look forward to in 2026. We have with us live in studio Angelo Taninco, Research Head and Chief Economist over at Security Bank. Hello, old friend. Welcome. So nice to see you here.
Thank you, Danny, for having me.
Okay, now before we go on to the look back, it's the last trading day. Let's go first with the headlines. Okay, so we have the news of the day, which is the BICAM signing the budget. There has been some transparency there. It was the first live streamed one. Some delays still, so you're gonna have a reenacted budget until January 5th at least. Tell us your reactions to this. Are you confident that this is what we need to tackle all the corruption issues that we saw in this year?
I think it's good news that the BICAM report was signed by both houses. And it shows there is progress in terms of having a bigger and more transparent budget for 2026. And we believe that despite a few days of reenacted budget, that the effect of that would be negligible. And therefore, we expect the signing by the President of the budget in the first week of January.
Any things of note when you talk about the content of the budget? So, of course, education is a big thing there, but it also says health, agriculture, human development. Have you looked through it and said, okay, we need more of this in this particular sectors? We were talking off-cam about, how we're still lagging in many other places, digitalization, AI. Give us an idea of the content and what you feel about that.
Well, the two main thrusts of the budget include the education and healthcare. So these are basic needs of the people. And it's nice to see the government putting more resources into this basic needs. And therefore, this could help propel the long-term growth trajectory of the economy if this is sustained. Also, the farm-to-market road infrastructure is a good project to push for because this has been lacking for ages, and more resources infused into this type of infrastructure program will help benefit the food security aspect and also increase the productivity, hopefully, of the agriculture sector.
Okay, now we cannot talk about a look back on 2025 without talking about the corruption situation here. As an economist, are you seeing that at least the government, the respective agencies that need to be looking into this, probing into this, are doing their job? Are you feeling that this is what we need for, of course, faster disbursement, of this fiscal spending, which we saw took a pull back? What are your general sentiments as we end this year?
Indeed, we have learned our lesson from the flood control project investigation that occurred since the second half of the year. Although the knee-jerk reaction of markets were on the downside, we saw the peso depreciating sharply at the start of the second half, the stock market also moving downward in the second half of the year. So the positive momentum that we saw in terms of the peso and also on the Philippine bourse were cut short by this. However, because we have learned our lesson in terms of improving more the governance aspect, we think that for 2026, this could be a good start or a restart in terms of ensuring that the budget for 2026 will become more efficient, will be more productive and more targeted, especially to those areas that we badly need to develop further. And as mentioned, we have the basic needs and also the social services angle have to be also effectively addressed. And I think the improvement will take place for the upcoming year after seeing the gaps that we have experienced in the second half of 2025.
So basically, it was high time that this way of probing should have occurred, and now it's actually happening. So better for us that the budget actually becomes more transparent, no, despite all of these issues. But I wanted to get your economic opinion on the impact on GDP of this whole corruption scandal. We saw that in the third quarter, lowest print we've seen in many quarters. We've missed the GDP targets of the government. We've been sub 6%. Without this corruption scandal, would we have actually met the targets, or was there really a softening of the economy this year, regardless of that?
Well, if we look at the last 3 years, we could have hit at least 6% growth if not for the inefficiencies evident in the public infrastructure program, specifically the flood control projects. However, moving forward, we think that there is still room for our targets to be hit, although I understand that we're going to have a revised targets to be released pretty soon, a more realistic type of target. And that's because we still face headwinds, not just locally, but also abroad. We still have the high tariffs in place. We also have geopolitical risks emanating, and that also affect our performance in 2025. But for the third quarter slump in GDP, that was primarily because you have more of a negative effect on the confidence level. So we saw the BSP's latest survey reports on both business and consumer sentiments down for the fourth quarter. But however, there's some glimmer of hope in terms of the outlook for the next quarter and for the next 12 months. And therefore, it shows that the business community as well as consumers, they can still afford to invest, to spend, but they are more of a wait-and-see position as they need more progress. They need to see greater clarity on the budget and also how it's being spent, and therefore that can help them move forward in terms of their spending and investment plans. So I think with the lessons learned, government will push through with a bigger budget, more efficiency in the use of the budget. Then we think that the confidence will be restored soon.
Interesting. So what about consumption in the fourth quarter? It was the Christmas season. Normally, that's when we really spend. How did you see this year?
Well, our outlook for the GDP growth for this fourth quarter is close to 4%. We have a point estimate of 4.2%. And that's because we still expect a sluggish consumption performance in the fourth quarter on a year-on-year basis, because fourth quarter last year, we didn't have this problem on the confidence being down because of the flood control issue. So that on a year-on-year, we'll see slower consumption growth together with, I guess, potentially negative growth on the capital formation and also a moderate growth on government spend. And that is highlighted in the national government's public infrastructure and capital outlays growth down for a fourth straight month on a year-on-year basis. So, but given that, the net export performance we think will be more favorable. We saw the trade deficit narrowed for the month of November. We saw merchandise exports performing better, double-digit growth thanks to electronics exports, and that led the electronics group to revise upward their target for this year to double-digit, because initially they were expecting flat or zero growth. So that was a better than expected result. So the net trade performance tend to dampen the negative impact of this corruption issue on domestic demand, primarily hitting the confidence side. So, but we think the recovery will be gradual for 2026. So first 2 quarters of 2026, it could be at above 5%, but not hitting the 6% that we envisioned, but hopefully closer to 6% in the second half. And therefore, we have penciled in a GDP growth forecast for 2026 of about 5.6%.
So you mentioned, I'll go back to the CAP and electronics export point, which is a shining part. But let's talk about the consumer confidence getting back on track. What's it gonna take? What's the main catalyst there? Transparency ba? Stability in the administration, or disbursement, fiscal disbursement? Tell us what's gonna bring the consumption back.
Well, one is, of course, we have already a low inflation environment this year. And for next year, we expect inflation to normalize closer to the midpoint of the target range of about 3.2%, our forecast. So that's still within the acceptable territory of the central bank. So we still think consumers will be able to spend better next year. Plus, you have the labor market still doing well. We know the unemployment rate ticked up recently, but just 5%. So it's more of a seasonal impact. But in terms of the jobs growth, it's still positive, especially for most sectors. So for as long as you have continual employment growth, and you have the demographics still doing better in terms of having a young and well-educated workforce, I think the labor market will be able to have a higher nominal income growth that will in turn be able to allow the consumers to spend and to, of course, hopefully improve the spending once they have the confidence restored, given that the budget is now going to be signed into law. and be able to
Okay.
offer a more transparent and more accountable type of budget for the people.
You mentioned inflation, Angelo. It's been below target. Is that a good thing? I mean, generally, I'd be happy, diba? But in terms of growth, is that a good thing that inflation is so low? And what's your outlook this year?
Well, one main reason why inflation has been subdued this year is because the rice inflation has been in negative territory.
Right. Yes.
Being the biggest rice importing
Mura.
country, global rice prices have been depressed this year. You have a surplus of rice supply internationally, and also coupled with a high base effect that allowed, of course, 2022, 2023, recall that inflation was closer to 6% per year.
Exactly.
And then it moderated to 3.2% in 2024. Now we think it's going to be at 1.6% for 2025. And as mentioned, we'll normalize back to the midpoint by next year. So we think that inflation being benign this year or below target is temporary.
Okay.
And it will go back within the target range of between 2 to 4% by next year.
So it's a supply side driven low inflation because of the rice. It's not because of the softening of demand from the consumer.
Except for the third quarter, we saw some softening in consumer demand, but at least in the first half, it has been at least sub 6% in terms of consumption growth.
Okay. Another bright spot could be the affirmation of S&P recently of BBB plus high investment grade with positive outlook. Give us your thoughts on that. Finally, we actually have this positive, external body that's validating that we're quite stable, at least in paying our debts.
Well, there are two things I think that are allowing the rating agencies to still have that affirmation on the ratings. One is the external sector. It remains adequate if you look at foreign reserves, at least $110 billion, import cover, 7.4 months worth, short-term external debt cover, at least 4 times. So it's healthy, the external side. On the fiscal side, interestingly, it's not high in terms of deficit to GDP. Three-quarter period, it's at 5.6%. And one of the things why it's still low despite growth slowing down is because the deficit has narrowed.
Okay.
And the reason why the deficit has narrowed because the government spend has weakened.
Okay.
Coupled with the fact that revenue growth is at low single digit. So even though you have slow growth from both revenue and expenditure, the fact that the expenditure is slower tells us the deficit is narrowing on a year-on-year basis.
Okay.
So it's still low.
Not necessarily the best thing.
Not necessarily the best thing. Another is that the debt to GDP is slightly north of 60%, 63.1% as of end September. So it's not a worrisome level if you compare that to our peers with BBB ratings, nor is it at a high compared to when we had that, I think, 20 years ago at close to 70%. So no wonder the ratings have been affirmed still by the agencies.
One other external report was the IMF saying that climate-related disasters on a macro level might go up to 2% of GDP losses if nothing is done. The BSP is already accommodating this in their monetary policy with inflation. But your thoughts on that? We're going to have to brace for even more losses from climate change.
Yes, we have penciled that as another downside risk to our growth outlook for 2026. Inclement weather, we think, will be there. And we have seen that in the past 2 years, especially this year, second half, and last year when we had both El Nino and La Nina period. So it's a long-term risk that we have to manage. And one of the things that we have to improve through government is in terms of improving the flood infrastructure program and ensure
back to this.
that the leakages there will be minimized and that because it has a multiplier effect on the economy and in terms of invigorating economic activity locally and also attracting more foreign investors because they also look at this risk as a major risk for the Philippines.
Yes. Tell me more about that. How our economy looks right now compared to our peers, our neighbors, to external foreign investments and investors, especially with these ongoing probes and even that climate change issue.
Well, this year, it was not a good optics for investors, especially for foreign investors. We've seen that in terms of the foreign investor share in our stock markets continually going down. I think now 18% share, all-time low as of the end of the third quarter. And then even the bond investment flows, initially it was positive, but then past couple of weeks it has turned negative already. And in terms of FDIs, it's also down on a year-on-year basis. So all of these have shown that foreign investors are not looking at the Philippines brightly, unlike other markets. If you look at the stock markets in the Asia Pacific, it's on average double-digit returns year to date. Biggest is Korea, more than 70% up, and on average, more than 20% up. And we are a laggard in the stock market this year. In terms of the currency, peso is I think the third worst in the Asia Pacific region, next to Indian and Indonesian currencies. So that also shows the sentiment effect on our economy being driven by investors is on the downside. And hopefully, that can be rebounded next year once we have this budget on track and the confidence restored.
Okay, last, before we let you go, your outlook on how the markets will close today. This is the last trading day. And the peso, of course, and your outlook on the index and the peso for 2026.
Well, for the PSEI, I think it's going to hover close to the 6,100 level. A slight
breaking
uptick,
through,
hopefully by today.
By today's end.
And in terms of the dollar peso, historically, the last trading day, peso tends to appreciate. So looking at closer to 58.5, 58.6. But that's still a depreciation compared to the 2024.
But on that note, that's supporting our exports for the SAP, diba? I promise you'd circle back to that.
Yes.
Is that a good thing for the export sector?
Partially. And also for 2026, we have an upbeat outlook for the stock market. We're looking at 6,650 as the year end for 2026. But that's just single-digit return prospect. And for the peso, we expect it to appreciate because the dollar is expected to weaken further for 2026.
All right, so still some bright spots there,
Yes.
Angelo, but a lot has to do, of course, with the government spending and spending properly.
Yes.
Thank you so much for your insights, Angelo Taninco, Research Head and Chief Economist over at Security Bank. You are watching Money Talks, and coming right up, a monthly minimum fee will soon be charged to accredited e-gambling operators. And maximum suggested retail price for imported rice will still be at 43 pesos per kilo. Keep it here on One News. Welcome back to Money Talks. Online gambling operators will soon have to pay a monthly minimum fee to the government. PAGCOR says it will start charging a monthly minimum guaranteed fee, or MGF, on all accredited e-gambling operators starting April of next year. The new charge will apply to online gaming system administrators and gaming venue operators and will be based on their minimum monthly gross gaming revenue. The state gaming regulator said the move is meant to close gaps in the current fee structure and ensure fairness, accountability, and steadier government revenue. During the first tranche starting April 1st to September 30th, operators with electronic casino games and generate a minimum 30 million pesos in revenues will pay up to 9 million pesos a month. Meanwhile, those without will pay at least 3 million. Higher fees will take effect in October 2026 as revenue thresholds rise. In other news, the Agriculture Department says the maximum suggested retail price for 5% broken imported rice will still be at 43 pesos per kilo for now. Agriculture Secretary Francisco Tiu Laurel said the price was maintained while the government completes procedures for a higher import tariff. The proposed hike, which raises the rice import tariff to 20% from 15%, is expected to take effect on January 16th. Tiu Laurel said any adjustment to the MSRP will be reviewed only after the higher duty is in place. The move follows a 4-month rice import moratorium ordered by President Bongbong Marcos to support farm gate prices, which had fallen to as low as 8 pesos per kilo. The agency said palay prices have recovered to as much as 17 pesos for wet palay and 23 pesos for dry palay in some areas since the ban. Local stocks are expected to consolidate on this final trading day of 2025. The PSEI opens this Monday higher by 0.1% at 6,073.90. The stock market reclaimed the 6,000 level on Friday amid relatively thin trading on the back of holiday optimism and bargain hunting. With only 2 trading days this week, year-end window dressing can provide a boost for the markets given the lack of fresh catalysts. Online trader 2TradeAsia.com notes that the PSEI may end 2025, quote, on a whimper, despite technical indications of a gradual rebound in the first half of 2026. But the delayed signing of the 2026 budget can delay infrastructure spending, triggering short-term liquidity squeezes into the first quarter. Meanwhile, the PSE has changed the sector and subsector classification of 13 listed firms effective January 5, 2026, based on recent corporate developments. A listed firm will be classified into a sector or subsector depending on the business activity that generates at least 60% of the company's revenues. U.S. markets slightly pulled back from the record highs this Friday, with investors wondering whether stocks can notch a Santa Claus rally. The Dow, the S&P, and the Nasdaq fell by about 0.1%. And U.S. 10-year Treasury yields went unchanged at 4.133%, while gold prices posted another record high at $4,529 per ounce, supported by elevated central bank purchases, inflows to exchange-traded funds, and Fed policy easing. Stock futures are little changed in after-hours trading. The Dow, the S&P, and the Nasdaq are all up by about 0.1% each. Now, Asian markets are a mixed bag as investors kick off the final trading week of the year. South Korea's Kospi is up by 1.6%, and both Australia's ASX 200 and Japan's Nikkei 225 are down by about 0.2%. And before we go, Manila's Finest emerged as the most awarded film over at the 2025 Metro Manila Film Festival, taking home 8 awards. It won 3rd Best Picture, Best Cinematography, Best Production Design, Best Sound, Best Musical Score, Best Original Theme Song for Sandalan, Best Float, and the Gatpuno J. Villegas Award. The last award is given to films that effectively showcase Filipino culture on the global stage. This marks the 3rd consecutive year that the award has been received by MediaQuest Ventures. According to MediaQuest President and CEO Jane Basas, their vision and mission are clearly rooted in Filipino culture. Manila's Finest is still showing in cinemas nationwide. And that's it for Money Talk. Sitting in for Cathy Yang, I'm Danny Laurel. Catch us again tomorrow. That's at 9:30 a.m. Kapatid, we are One News, all sides, all the time. Have a great day.